Welcome back, traders. After yesterday's tariff-fueled roller coaster that had us dissecting the Nasdaq's moving average standoff and IWM's breakout legs, today flipped the script with earnings optimism pulling indices into the green despite the volatility. SPY clung to its 20-day lifeline, real estate staged a textbook reversal, and SMR volume surge proved why pattern plays pay dividends. You're tuned into the Stock Market Summary Series, and as you guys know, none of this is buying or selling advice. We're just here to provide market commentary and education, but nothing we say here is financial advice. Okay, let's get into it. So overall, a pretty strong showing today, really fueled by those solid bank earnings and that welcome bounce from the chip sector.
Yeah, it definitely helps shake off those, residual trade war blues we were talking about last week. And the indices, technically, they showed some incredible discipline. SPY managed to climb 0.44%, critically held support right at its 20-day moving average.
That's the line in the sand, isn't it?
Yep, exactly. And QQQ, well, it rebounded even stronger, up 0.71%, closed firmly above its 20-day line after that brief early test that probably worried a few people.
Yeah, definitely had me watching closely there for a minute. And small caps, they just refuse to quit. IWM just keeps going.
Yeah, that rotation magic continues. Popped 0.98% to fresh all-time high.
Incredible. That momentum in the smaller names, it's still, one of the clearest signs of market health we have right now.
For sure. Moving to sectors, the biggest mover was real estate XLRE, surge 1.45%.
And the XLRE move, it wasn't just random buying, right? It looked like pure chart geometry to me, a classic death hook reversal we talked about.
It really was textbook. Snapped it right back inside that massive weekly symmetrical triangle we've been watching.
So for anyone not familiar, that death hook, it's a powerful reversal pattern.
Right. It happens when you get this sharp short-term breakdown, but it fails really quickly, and buyers just immediately shove the price back above the old support.
Kind of wipes out the bears in one go.
Exactly. It completely reverses that recent downward momentum. But the question now is this an impulsive jump starting a new uptrend, or
does snapping back inside the triangle just mean more chop?
That's the thing. Right now, snapping back inside probably suggests, maybe more consolidation, more chop ahead within that larger pattern. Still something to watch closely.
Okay. And on the other side, materials, XLB, lagged a bit, dipped 0.45%.
Yeah, seems like those lingering tariff fears are still putting some pressure on the commodity-linked stocks there.
Makes sense. Now, our watch list stock, NewScale Power, SMR, it really capitalized on its setup today.
It absolutely did. Extended those gains on monster volume, following right on from Monday's symmetrical triangle breakout.
And this move, it just highlights the payoff, right? Understanding pattern recognition combined with market structure.
Totally. And SMR's already high short float. That thing was practically loaded for a squeeze.
Right. And that huge volume confirmation today was the trigger. It just forced the squeeze, unlike, say, QUBT's ascending triangle tees from yesterday, which kind of fizzled.
Yeah, that one didn't quite get the follow through. And, when you see a breakout like SMR, the real trading wisdom is knowing how to manage it.
Like using tight risk caps, especially with that kind of volume.
Exactly. Successful trading, it really requires having a defined plan, knowing what you're looking for before the trade even triggers. And these specialized techniques, the volume confirmation, risk management, position sizing, that's precisely the kind of stuff we drill down on in Grok Trade's mentorship program.
Right, getting that process locked in. Okay, quick pause here. As always, guys, if you've got a stock you're watching or a question about the markets, drop it in the comments. We might cover it in an upcoming episode. And by the way, if you're enjoying this video and appreciate these market summaries, do us a big favor and hit that like button. It's totally free and helps us out in a big way. And click subscribe, too, so you don't miss a beat. You can always unsubscribe later.
Okay, shifting gears a bit to the macro picture. Economic news was pretty light again. That ongoing government shutdown is still delaying key data prints like jobs and CPI.
Which keeps the market really focused on earnings and the technicals, doesn't it?
It does, pretty much purely. The one bright spot we did see, though, was the New York Fed's Empire State Manufacturing Index. That's surprisingly accelerated.
Oh, interesting. What did it show?
Showed rising optimism, particularly around hiring, actually, which kind of reinforces Chairman Powell's complex balancing act,
Dealing with strong labor demand while navigating these inflation blips.
Exactly. And it keeps those anticipated October and December rate cuts firmly on the table, it seems.
Okay. And turning to maybe hedging assets? Bitcoin seemed to stabilize after getting pressured yesterday.
Yeah, it did. After dropping below its 50-day moving average, BTC found support just above that crucial 108K level. That was the zone we identified as the immediate make-or-break area.
Good to see it hold there, for now at least.
Yeah, definitely. And meanwhile, the metals complex just keeps, confirming that flight to safety bid. Gold blasted up 1.73%, new record highs.
Wow.
And silver actually outpaced it, surging 3.27%.
Impressive.
It's just a textbook example for everyone holding through the noise, right? Letting those winners run when the fundamentals and the technicals line up like this, it leads to powerful moves.
Absolutely. Let your winners run.
So when you kind of step back and look at today's really diverse action, you've got SPY hugging its 20-day, IWM extending to new highs, SMR ripping on that breakout, BTC testing critical support.
It really spotlights the complexity, doesn't it? These modern rotation-heavy market swings.
It really does. And this kind of volatility, this complexity, it's exactly why, Grok Trade's one-on-one coaching focuses so much on integrating all these different data streams, helping traders forge that unshakable trader's gut, really. Gives you the edge.
Makes sense. You need that confidence in this environment. So, wrapping it up for today, earnings resilience basically carry the majors through, defying some of that external volatility.
Yep. With IWM and precious metals clearly leading the charge.
Then spotting those sector rotations, those reversals early on, that's what keeps you ahead of the curve.
Couldn't agree more.
All right. Let us know your take. Drop your thoughts on SMR's potential for a further squeeze in the comments below. We'd love to hear what you think.
Yeah, definitely interested in that.
Have a great rest of your day, everyone, and we'll catch you in tomorrow's Market Summary.